Today, I would like to share 6 actions that I think every individual investor should take in the months ahead. The first is to remind yourself that we are better if we are always investing. We should be investing every month for the rest of our lives. While I do believe that the stock market is richly valued in the US, the S&P 500 is trading above 25 times earnings. Look back in history and tell me how many times that's happened. You're not going to find many. But key first point, always be investing, always be putting money into the stock market routinely, week in and week out, month in and month out. Number 2, take a cautious stance. Remember, just because you're investing, it doesn't mean you need to invest in the riskiest assets out there. There are some wonderful companies, and in fact, later in my list of things to do, I'll be sharing 5 stocks that I think you should consider buying. But there are large cap companies that pay dividends, stable businesses. They've been around for decades. They have a global business, and a lot of these companies just are off the radar right now. Nobody's paying attention to them. They're not on the tip of the tongue of every presenter in social media. They're not being covered in the financial media, and you can get a really good price. Number 3, any company you're invested in, any stock you're thinking about buying, start forming a habit of taking as much information and putting it into the AI platforms as you can. You can copy and paste 10Ks, 10Qs, 14A filings, earnings call transcripts. Everybody, take your largest position and try and soup up your research using AI tools to understand as much as you can about that company. I'd say I'd be happy if you just committed to doing that for 45 minutes, just 45 minutes, just so you can learn and see what's possible with these tools. You can learn a lot more about these businesses and just be more in the know about the companies you own. You don't have to transact because of what you learn, but learn to use AI platforms now to be a smarter investor. That's number 3. Number 4, this one may scare people a little bit, but I just want to encourage people to get in the habit of looking for a second income. There's going to be a lot of remapping of employment with AI. If that weren't the case, we wouldn't be looking at the largest technology companies in the world that are, customarily generating 30, 40, $50 billion in cash flow a year that are going through layoffs. That has not happened in history. Large companies going through layoffs are being met with a significant transformation in their core business, and they're looking at financial disrepair, and that's why they go through layoffs. But what's happening now in a lot of cases is layoffs are developing because automation is replacing this need for certain skill sets and certain functions. So everyone should now activate a little bit more, almost think of yourself as a contractor and be looking for different incomes inside your company or outside the company. And you know what? That's just risk management. Even if you don't ever go for it, it's going to cause you to learn a little bit more about the world out there. So that's my 4th suggestion. My 5th suggestion is it's time to talk about some stocks. Let's talk about some stocks that you could invest in now that I think will do well in the market environment we're in today. One of them is riskier, and I know many of people are thinking, that's the one I want to hear about. And the reason we want to hear about that, by the way, is because the stock market is up 30% in the last 4 months. So give me some more risky ones because I love them. They're going up so much. But we want to do the opposite of what's happening in the marketplace. So the companies I'm going to list out now are listed in the order of risk from cautious to aggressive. The first one is International Business Machines, IBM. We've all heard of it for decades. For so long, it was not a stock. For so long, it was an incredible stock. And then for decades, it was a real disappointment. In the last 5 years, it's been wonderful. This is a company with advanced technologies, quantum computing emerging. IBM will be a leader as quantum computing emerges. And they're very well financially managed now. So there are certain aspects of their business that are still struggling, but I think overall, IBM is a great cautious investment for the next 5 years. The second is Progressive Insurance, PGR. The most technically advanced insurer, auto insurance business. We've all seen their ads, a great brand. They're really ahead of the game in insurance and technology, ahead of Geico, the great auto insurance company subsidiary of Berkshire Hathaway. Excellently well-managed financially. I think it's a great cautious investment. The third one, now we're going to move into some stocks you may not have heard of. The third is a company called Stride, ticker symbol LRN. This is an online learning business. We interviewed their CEO, James Rue. He's an absolutely fantastic leader and human being. And what has happened post-pandemic is there are still so many scenarios where children and families want to get extra learning online. There are certain special needs situations where a student can't get the care and attention that they need in the school system. And then there are other situations where perhaps you just have an outstanding physics student or French student in the classroom at school that wants to do some extra learning online. Finally, Stride is extending into adult learning and certifications because we all want to be lifelong learners. So it's both a wonderful business for people to consider as a customer, but I think it's an excellent long-term investment as well. That's number 3. Number 4 is a company called Sterling Infrastructure, ticker symbol STRL. Now, you might think you missed this one because their CEO, Joe Cotillo, took over in around 2016 when the stock was all the way down at 3. The company was verging on bankruptcy, and Joe stepped in, and that stock has gone from 3 to 270, 280 in the last decade, 90 times in value. A $10,000 investment would be worth $900,000. Those are very, very rare. We bought after that huge run. That's okay. Let the run be what it was. We're looking at the business moving forward. I think it's just such a well-run business. It's a small company with a great prospects in the future, and there's going to be so much data center build out. And finally, our last stock is the riskiest one. Should I share it? I don't know. Do I want to encourage you to take risk when the S&P is above 25 times their earnings? Do I want to encourage you to take risk when the price to sales for the S&P is 3.3? Okay, that may not sound like a big number, 3.3 times sales for S&P 500 companies, but that is higher than it has been in the last 25 years. In other words, valuations today in some ways are richer than they've been for a quarter century. And what that should mean to you is not, wow, everyone loves the market, I should pile my money in there too. It should be telling us, let me be a little bit more careful here, because a lot of these stock prices will not be sustainable. The gains will not be sustainable. We'll see more volatility and we'll see declines. So why would I be adding a risky stock? Because it's such a well-run company, such an exciting company. And it's a company called Rocket Lab, ticker symbol RKLB. Just read about their founder, Sir Peter Beck, and his passion for space. Although there have been some lower grade promotional companies like Virgin Galactic that came public that has done miserably poorly in the public markets, it doesn't mean that space is pure speculation. Obviously, SpaceX has been a wonderful success thus far, but SpaceX has also created some scenarios where governments and other commercial entities want a good competitor to SpaceX, and that company could very well be Rocket Lab. SpaceX is 20 times larger than Rocket Lab, but Rocket Lab is very innovative, very well run, excellent financials, and great promise. So those are my 5 stocks, and those are my core 5 lessons for the 5 things that I think every investor should consider doing here in the months ahead. Always be investing, but take a cautious stance. Maybe build a cash position of 10% or 15% in your portfolio. Look for an AI platform and start loading information of your companies, even your investment life. You're thinking about investing in business, and start getting more and more insights into your portfolio. Number 4, keep looking for a second income just as a cautionary step. And number 5, those 5 stocks to consider purchasing. And of course, I have a 6th, and you know it's a self-interested 6th. But if you're not a member of the Motley Fool, I think you should join. We have some AI-powered scoring systems right now across databases, scoring thousands of companies across more than a dozen different factors. And I think you're going to see an alternative data set that nobody has. We're trying to bring professional grade, enterprise grade scoring systems and evaluations of public companies that you would only get at large institutions right to the desktop or mobile device of every individual investor in the world. And that's part of our mission at the Motley Fool. So hopefully you'll choose to join us at the Motley Fool, but if not, continue to enjoy our free solutions. And thanks for being here. Best of luck with your investments, and Fool on.